Thanks, team, for giving this opportunity to speak on InsurTech, and thanks for the quick introduction. So, in the next 30 to 35 minutes, I would like to give an overview of InsurTech, what are all the global trends happening in the InsurTech space, what are all the global forces affecting the insurance industry, what are the new business models emerging in the insurance industry, what kind of investments are going in InsurTech industry, and what kind of regulatory aspects going on. If we want to begin this InsurTech journey, what are the key aspects to be looked at? So this whole gamut of things I would like to cover in the next 30 to 35 minutes. So let's begin with it. So I would like to begin this session with one sentence. It says, the future belongs to the digital. As the earlier speaker has mentioned, we are very fortunate to be in the digital wave of the world, the fourth revolution happening today. Few of the companies which is mentioned, like Facebook, which doesn't own any content, Instagram doesn't own any images, Airbnb doesn't own any real estate. So none of these firms existed 15 to a decade earlier or 15 years before. But all these new firms have emerged in the past 10, 15 years. And one of the reason possibly we all agree is digital. So digital is something which we cannot neglect. Digital is something which should be there in our business model. And even Gartner says the future is all digital. For example, I was reading some articles a couple of days before. Looks like it takes 35 days for a new technology to reach 50 million users. So back in the earlier days, it would take years, 3 years, or 5 years, but now it takes only 35 days for a new technology. So this gives us the situation of how digital is emerging. And there was an interesting prediction. They say all these fintech and insurtech new models will erode 30% of the banks and insurance firms' revenues in the coming years. So it's an interesting space. So on a daily basis, we hear a lot of these buzzwords in the workspace we work. Everyone wants real-time. Customer expectations are increasing. Everyone wants to be on mobile, real-time, big data, smarter, customizable purpose. There's a whole gamut of things happening. So take a step back, and how are these things influencing the global insurance industry? If you look at, we have identified 4 different key points which are influencing the global insurance industry. One is technology-driven world. As I've mentioned earlier, new technologies like artificial intelligence, blockchain have been coming into the world, and they have to adopt solutions based on these new technologies. And increased customer expectations. The customer is God today. Whatever the customer needs, if you are unable to offer it, you're not in the game. So you need to understand the customer behavior, tune your solutions with respect to the customer expectations. Maybe it's a mobile, maybe a real-time, just a click of a button or an on and off. So the customer expectations are increasing, and you have to match to it. And the other is increasing war for talent. So all these new disruptive technologies are increasing, and there is a lack of talent, which the insurance industry is unable to acquire. So, I mean, there are other industries which are taking this talent, and insurance is something which is not able to attract them. And the other we have is the economic considerations. There are so many economic factors which are also influencing the insurance industry, like the policies, the interest rates, slowdown in the economy, the exchange rates. So there are various types of indicators which are influencing the global industry. So let's not get disappointed. Even though there are so many influencers to the global industry, there is a significant amount of investment going in the InsurTech industry. I mean, they say it's around, although if you compare the numbers of the fintech investments and InsurTech investments, there is a lot of gap in between them, but still there is a significant investment happening in InsurTech. They say in the last quarter 2017, globally, there's around 300 million of investment has gone into InsurTech, which is less than the quarter 2, which is around 900 million, but still there is a dollar value involved in it. And if you look at the predictions for the Malaysia, they say it's expected to grow at a CAGR of around 4.5% on the PNC and around 4.7% on the life insurance sector. Although we all need to agree that the insurance penetration in Malaysia needs to be improved. Currently it's around 55% penetration of the population, and now they say they have a target to make it 75% by 2025. So it's a good, healthy target. But work needs to be done in order to meet the target. So, and an insurance industry contributes around 5.2% of the GDP of Malaysia, which needs to be improved. So, I mean, I also have a similar kind of a slide which the earlier presenter has presented, but I would like to highlight on few of the numbers. What we have did is like comparing the Malaysian stats with respect to the China and India, Singapore, Thailand. They say even though this fintech and insurtech are happening globally, when compared to the Malaysian context, how do we stand between all these other countries regionally and globally? Fintech is not something new. Fintech or insurtech is not something new in Malaysia. It's there been since years in the past. They say the investment in the insurtech and the fintech is going at a CAGR percentage of 21.4%. And last time when we are calculating, there are around 100 plus key active fintech firms in Malaysia of various spaces, whether P2P or payments or insurtech, diversified. And there are some 130 plus angel investors in Malaysia. These angel investors are rich in cash. They're looking for unique ideas to invest. So the industry is doing good. So if we quickly look at these numbers, there are 4 different spaces which has been disrupted globally. And if you look at, they are the heavy numbers here, 40 and 20. This belongs to this 40 is for the tech giants which are entering in the payments, the Alipay, Alibaba, they are pushing this number. And on the 20% on the India, this is with respect to the Paytm. During this demonetization exercise which happened in India, this Paytm app is being used across all the people. Even a merchant, even a coconut seller on the road, he used to use this kind of an app to promote his souls. So that is this. And insurance in China has been highly disrupted. There's like firms like Zhongyan, which has been invested by Alibaba, Tencent, all the biggies. So, and if you look at the Malaysian stats, although we are not comparable with respect to the China and India, but still there is some activities happening on. If you look at the lending, it's 2%. This is because of the Securities Commission has given license to 6 P2P players, which are few of them are operational, few of them are yet to operate. They've already made around some 8 million through this crowdsourcing platforms. And insurance is something which is the area we look at, although the activity is very less, but still it's not low, it's increasing. I would like to give a perspective of what is happening in the Malaysian context. What as the Malaysians we do? Interesting scenarios. It's looked like 13.7 hours is the average amount of time spent by a Malaysian on smart devices. Either they don't know whether they are purchasing on Lazada or they are doing Facebook or Twitter or Tinder. We don't know, but 13.7 is the amount spent by a Malaysian. So if anyone are building a new solution, they should look at having a digitally enabled solution in order to attract these people. And then the average monthly digital expenses is 367. Either they purchase online products or online games. So this is the amount of RM on an average basis is done online. So if any solution is built, they make sure there is some digital involved to it. So moving on to the next tips, here I try to give a demographics perspective and what is the potential in Malaysia. We have a very young population and the credit card penetration is 20.2%, which needs to be improved. And Malaysia is mostly a cash-driven economy. If you compare cash and cashless, it comes around 9% cashless to 91% cash. So it's predominantly a cash-driven economy, which needs to be changed. In Singapore, is around 62% cashless-driven economy. So, and there is a huge scope for uninsured population in Malaysia. The insurance penetration is only 55%. They need to do an insurance inclusion within Malaysia. So there is a lot of scope for improvement, and people are using mobile. So all your solutions should bring the insurance inclusion in Malaysia. So here I've tried to give a quick mapping. We have done a survey of the fintech or insurtech players in the Malaysia. For the context of my discussion, I would spend time on the insurtech places. What are the key companies what kind of solutions they are offering in Malaysia. For example, BookDoc works in a model like, say, if you want to book an appointment with a doctor, there is no platform currently available in order to connect the patients and doctors. So BookDoc is the answer. For example, if you take Kastana, it's a very interesting concept they are working, which is something called pay as you go. You don't need to pay insurance premium like last year. If you are in a good health condition, you have good habits, your premium can be reduced. So that kind of a model they are working on. Brokerfish is an online aggregator model where they give, where you can compare the products of various insurance companies, life or product or health, and they can get a quote and purchase. So this is very useful. Drava is another company in the insurance space for the health, safety. Next, U for Life, they partnered with a telecom company to give insurance for all their mobile subscribers. So this is U Life. And Fatberry is very interesting. They offer an artificial intelligence-based insurance solution where someone can buy an insurance policy, mobile, digital, without any human intervention. So that is Fatberry. So, and they have plans to launch many other solutions. So this is just a holistic view of on some of the few InsurTech firms in Malaysia which are trying to disrupt. So I'll quickly move to what are the different business models, what are the different solutions which are becoming very popular in the globe with respect to InsurTech space. So I'll quickly give an overview. In the whole value chain of the insurance, the biggest disruption is having on the distribution side, which is your digital sales enablement when compared with claims or underwriting or risk capital. And a few of the trends globally on the InsurTech are, for example, on engagement. Engagement is more of digital delivery, robo-advice. So as I mentioned earlier, robo-advice is something, there won't be any human, you won't need to call a contact center of an insurance company. There will be a robo-advice intelligent who sits behind and answer all your queries. That's robo-advice. A digital claims process. This is an interesting feature having globally. I've read somewhere like, for example, if an accident happens on the road, you really don't need to wait for the insurance company person to come there, evaluate and process. They're using of drones to come there. It will come to the accident situation. They take pictures, they upload to the insurance company. The whole claim management process has been reinvented because of this new disruptive technologies. So this is one of the examples on the digital claim process. So when we have drones there and say new micro duration policies, this is a very interesting policies. Why I want to buy an insurance policy for 1 year or for a travel insurance policy for 1 year? I'm going to Bali for 3 days of New Year. I want insurance only for 3 days. So these are all micro duration policies. So I want and the usage-driven policies. I won't drive 24 hours my car in Malaysia. I only drive on a weekend. So these are all usage-driven policies. I only drive for 3 hours. So there are some concepts coming on the global where on your mobile, you can turn off whether you want from 7 a.m. to 7 p.m. or whole morning or 3 days. So you can choose all those options. These are the various models happening globally. And these are all the digital, the next is the digital brokerage, where I've mentioned on the aggregates, there will be a collation of all the players who are offering insurance products. They sit at one place. You can compare, evaluate which one to take. That's on the aggregator side. On the data intelligence, using of AI technologies, where I've mentioned earlier, for example, dynamic underwriting. Underwriting is one of the important step in the value chain of insurance. Underwriting is a very critical process. They'll evaluate on various parameters, your health condition, your earnings, your biological status, everything they'll consider. It takes huge lot of time. But now, this digital underwriting has come into place where there is artificial intelligence based, they can do the underwriting on the fly. So, I was reading some interesting concepts in China. Apart from the traditional credit worthiness, what is currently taken is also a social quotient. The social quotient meaning how much time you spend on internet, what kind of products you buy on internet, how loyal you are to your particular brand, how loyal you are to your government products. So all this kind of gamut of things has been analyzed, and they are giving score to each individual. This is currently happening in China. Each individual in the China will have a score, and it determines whether you get an insurance policy or Even this score is used in the wedding platforms as well. So if you are planning to get married, all you need to give is your photograph and your Sesame score, and they can get all these details. So this is how the underwriting creditworthiness has been revolutionized. And IoT, I'll talk about it. IoT in the place like the drone example which I gave will fall here, and we all know about the blockchain. Currently, blockchain is used to ensure high-worthy assets. For example, if I have a diamond or if I have a very rich bag, I can put in a blockchain and I can insure it. Say, for example, diamond, if someone is stealing it, there are some smart contracts built around this. They can protect, they authenticate this transaction. Although there are some technical details to it, but the concept, the use case is like high net worthy products can all become under blockchain. Even there was an interesting use case in India where there is a land registry happening on blockchain. So traditionally we go to the government offices for the land purchase and all. Now it goes on blockchain. You will have your record on blockchain for your land registry. So there's some interesting things happening globally. It's been revolutionized. And the whole value chain of the InsurTech has been disrupted. And to spend some time on this model called pay as you live. Pay as you live is a concept for the health insurance or life insurance concepts where, as a customer, you will give your personal data to your insurance company by means of your watch or your Apple Watch or some telematic device. So this watch will have the capability to take how many footsteps you're taking on a daily basis, how much time you're walking, your health habits. All these things will be sent to the insurance company, and the insurance company will analyze how good is your health status, how good is your health status, your habits, your sleeping habits, your heartbeat, BP, and all those things. And then they can, if all these things, our score is good, they can reduce your premium, or they can give some value-added services. Say, for example, in year one, if the insurance premium is 100 ringgit, if your score is all good based on all these things, you can get for the next year at 80 ringgit only. So there are some disruptions happening as pay as you live. And the other thing, a similar concept is pay how you drive. So pay how you drive is a concept where today you're paying 100 ringgit for your travel insurance, and if you are a very good driver, you're driving since 20 years clean, no accidents, very clean, why do you need to pay the same amount of insurance amount next year? So this is coming as, this comes this pay how you drive concept, where there will be a telematic device put in your car. It will track how fast you're driving, how is your braking phenomena, what kind of speed you're going, and are you following signals or not. All this data the insurance company will analyze, and they will determine what kind of insurance premium you get next year. And they can give some cashback offer. Since you're a very good driver, they can give cashback, and they can give a premium discount or some value-added services. So this is some interesting concept happening. So like I mentioned earlier on the underwriting is getting evolved on day-to-day basis. Previously, we only look at age, gender, physical health, mental health. We look at the location, education, job, finance, experience, health, fitness, habits. This is all based on the data, what you give to the insurance company. Now all these insurance companies are using big data. You don't need to give those the details. They know how much time you're spending on social media, what kind of products you're using, and they will decide on this score. It's similar to the example which I've given on what's happening in China. And these are all some few examples which I felt it's more appropriate to put in here. So for example, this company is called CXA Connections. They are building a insurance solution for its employees. They will try to see what are your employees spends on insurance, what kind of diseases they have been prone to get a model and reduce the insurance cost to the companies, and also for the well-being of their employees. This is one interesting concept. And Bima is one of the micro insurance product where you can purchase micro insurance through mobile. And I forgot to mention earlier, micro insurance is one segment which is completely untapped in the Malaysia. For example, this micro insurance could be your pet insurance. You have a bicycle, you love your bicycle, you can have an insurance for your bicycle, or your fleet insurance, or there's an earthquake, you can have an earthquake insurance, or there is a theft on the road, you can have a theft insurance, or a wedding insurance, you don't know how the wedding comes out, so you can have a wedding insurance. So these are various kinds of micro insurance products are coming in the globe. And we all know GoBear. It's again comparison site of all the key players of the banks on their insurance products. And Fintesi, it's a FinSense is a Singapore firm. It's also provide an online portal where you can compare your products and buy. And I've mentioned earlier on the chatbots. So for example, they offer solutions. You don't know how much is your insurance payment and when it is due. So instead of calling a contact center, there will be an app where you will say, please tell me what is my insurance amount. So there will be a bot or a listener at the back who will give you all those kind of details. So this is very interesting. And Everledger, this is one of the concept I was telling earlier, is the company which do the financing and insuring of diamonds. And next, so far we have seen what is happening globally on the insurance sector, what is happening in a Malaysian context, and what kind of business models are available, what are the use cases which the firms are working globally. Now, let's go to a situation if someone wants to begin this InsurTech journey, where they should start from. So, what is currently stopping the insurance firms for going innovation is mostly, for example, they have the legacy IT platform. Says they have the same IT system since 20 years. They have few limitations. They can do few things. They cannot do few things. So those needs to be eradicated. There is a conservative approach. This conservative approach is very dangerous because all these fintechs and insurtechs are coming into our space and eating our pie. So we need to come out of this conservative approach and go very aggressive and new competencies. All these blockchain, AI technologies, there should be enough talent within the firm to build solutions around it. So they are stopping them. And the cultural shift, which is fundamentally required within the firms. So, but we can develop new digital solutions which can stay relevant to the customers based on the customers' needs, what they want. It could be a digital model enabled, and it should have an operating environment and with respect to all our regulatory Sharia or digital regulators principles. So if someone wants to begin a journey, there are multiple ways. Either you can partner with some firm, or you can buy some firm, or you can acquire or co-partner. Either you can partner, or this is the trend happening globally on InsurTech and accelerator programs. They will ask the fintech companies to come, they'll give their own data to play around. This is the kind of a sandbox environment. Malaysia also launched the sandbox environment. So these are all the InsurTech and accelerators. You can go with a venture structure, you can have an innovation network. This is a recent trend happening. Many of the insurance firms are starting up their own innovation centers within their organizations itself. So there are different ways where you can get engaged with the InsurTech. So with this note, I would like to conclude my presentation saying it is not the strongest of the species that survives, and it is nor the intelligent that survives. What is important is adaptability to change. Change is inevitable. Thanks everyone for giving this opportunity.